Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is 6:14 a.m. as I'm starting the video on Thursday, August 25th. As always, please run your player at 1.5x. Quick look at futures. Not a lot going on. Up about 0.5% across the board on equities. Nothing much happening in the commodity front. I did see copper was up over 1%, but everything else was flat. Of course, today we've got GDP and jobless claims, but then tomorrow we've got CPI and at 8:30, and JPOW giving a speech from Jackson Hole at 10 o'clock Eastern time. And I think those two things, CPI and JPOW, are going to more or less be a big overhang today. Of course, anything can and might happen, but I don't expect some kind of big, risk on type of move ahead of CPI and Powell. Of course, if you get breakouts and you see things happening and you're nimble, active intraday trader, certainly, you can take those trades, no problem with that. I'm speaking to the larger picture of, the next big move in the market, sustained move, whether that's up or down. I think will largely be driven off of how things turn on CPI and Jay Powell's comments. So keep that in mind today as you're trading. Over on the earnings front this morning, we've got Peloton. They just announced that they're going to be trying to move some product through Amazon. We've got the dollar stores, Dollar Tree, Dollar General, Burlington Coat Factory, Abercrombie and Fitch before the bell. And then after the bell this afternoon, Affirmed, Marvell, Dell, Gap, and Workday were the big ones that I saw. I think last night NVIDIA didn't have such a hot report. You may want to watch for sympathy moves in AMD and the semi-complex in general. See if they, I believe the stock is down. See if they buy that up or they sell it off. You may get an outsized move there. As we start going through the charts, not a lot happened yesterday. I think we're in that wait and see mode, consolidation ahead of the CPI and Jay Powell. So not a lot of big moves to talk about. U.S. dollar has been stoned right here at the 109 level, given that double top look. Now, if there's some kind of breakout, either today or tomorrow, be aware of that. Remember, rising dollar means shrinking global liquidity. So those are usually not very bullish for stocks. When we go to TLT, not making dramatic moves lower, but is moving down, which means yields are inching higher. Again, tomorrow may be a linchpin either to shoot rates higher, making TLT come down, or, of course, reverse and go the other way. So I think the technicals certainly paint a picture of favoring a down move in TLT. We've got the high, we had the high level high level bear cross. Now PPO has dropped below the zero line. RSI is down in its bearish regime. We've got price below all the moving averages and breaking below this little bear flag. And so now my expectation would be at least come down here for a touch of 108. As we've been discussing, if you took this up here, you're welcome to trail a stop down or kind of just let it ride and see what happens. You may want to, if there's tomorrow, if there's some kind of a big move, as JPOW starts talking and you get that big move down to 108, I would punch the ticket at that point and then recalibrate around 108 for either, if it stabilizes here, if there's a big outsized move tomorrow, take your profits on this short, and then if 108 were to break, then you can be short against all of this, and if it stabilizes, you're certainly welcome to take a long there at support at 108 for a potential bounce. VIX was down yesterday. We do have a gap here that will get filled at a certain point. What I wanted to point out on the VIX, if you go back in history and look at these instances where a downtrend line has been broken, I want you to take note of something. Here was a downtrend line. Once it broke, it went straight up. Here, we had a downtrend line, and what happened was we had a period where it went up to 25 and was contained for a while, came back and back tested the breakout, and then went north. Here we had a trend line break, and it went north right away. And here we had a trend line break, and it essentially went north right away. My point is, what you usually see on a trend line break, after a significant downtrend, is you can break out, and one of two things happens, at least in these prior instances. One, it shoots north right out of the gate and never looks back, or it comes up to resistance, comes back for a back test, and in this case, comes back to fill the gap down to 20, and then heads north. Pretty rare. I've only gone back to November, so you're welcome to go back into time and look at those volatility characteristics. But in my experience, this is pretty cautionary, because you usually don't see a breakout in volatility and then come back to make a lower low, fill this gap and then just keep going, like down to 18 or something like that. You just don't see it very often. Anything can happen, but I don't think that's the base case. I would say either a move down to fill this gap, then higher, or higher tomorrow after JPOW comes out with whatever he wants to say. So be careful about the posture of the VIX having already broken out of that downtrend. Bitcoin not doing a whole lot, just inching higher, but not really any kind of impulsive move in either direction. Oil is making progress. I have price closing above the 200 EMA right here in gold. That's another technical check mark for the bulls. I think oil is starting to show signs of a move higher. What you want to see now, of course, is price continue to hold the 200, and the next technical event would be to recapture the 50 here at 97, and then, proceed higher from there. NIMO came down to minus 60 and has bounced. Same thing with the NASDAQ oscillator, came down to the low end of the range and has bounced nominally. Here on SPY, we are in this either call it a congestion range or support range, however you want to describe it. But I think until price can break back above the 200 and break back above 415, I don't think there's a whole lot to be, super excited about. I think that would be a nice technical event. Why? Because you'll be back above the 200, and then you can simply stay long against the 200. My only caveat to that would be, if that were to happen today, I think that would be, certainly more positive than negative. But don't forget, we got the CPI and JPOW tomorrow, so that could prove to be a little fake move. If we get marginally above 415 today. Personally, I'm more in a wait and see mode, given the macro stuff happening tomorrow. I'm personally not going to pile in to, a bunch of positions just because today, we got to, 415.50 or something like that. But in general, if tomorrow afternoon, after JPOW and all that has cleared, and you were above 415, I would certainly take that as a bullish sign. Here on the 60-minute chart, you just got the same thing kind of blown up. You see the 415 here. We do have a gap up to 416.72. So that would be a scenario of pop above 415, come up and touch the top of that gap, get it filled, and then kind of either oscillate there for the rest of the day or pull back, right? Go up, fill the gap, hold 415, or drop back into this little trading range. Moving on to the Qs. The Qs to me are a lot more problematic in terms of looking for signs of an all clear, where we broke out, then we came back and lost the 200, lost the downtrend line, lost the 8-day, and now we're even below the 20-day. So really the only thing holding this up is the 50 down here at 310. So for me, talking long term, right? Not intraday, not intraday trading. I want to see price get back above the downtrend line and the 200. That would give me a lot more confidence to say, okay, Qs took a hit and then bounced back, got back through this resistance zone, got back above the downtrend line, got back above the 200. That would give me a lot of confidence. And, I think, let's see where we're at here. We're at 315 and we're at 325 on, that's where the 200 comes in. I'm willing to give up that 10 points for that degree of confidence. What I don't want to have happen, at least to me, is get up in this chop zone, make a little progress, get rejected, come back down. I would rather, if I'm going to anchor some positions for the longer term, I would like to do it above these key levels with price above all the moving averages and above the downtrend line. That to me would give me a lot more confidence in going out in time and buying some longer term positions in tech. And probably for that to happen, what you'd want to see is, going back to our TLT, you would probably see TLT rising in that environment. As long as interest rates are rising or TLT falling, that's a headwind for tech. So in order for tech to advance and have a tailwind, you'd want to see TLT rising or rates falling, if you prefer to think of it like that. Here on the QQQ 1 hour, you see we've got this open gap. You've got this resistance zone that we've been tracking for a long time between 317.50 and 322. We've got the gap in between. So one possible scenario is, a move up to fill that gap and then get rejected along this line here at 322. Now that's something you could certainly take advantage of intraday if you were down here, and you could take the approach, okay, at 317.50, if price could get through that, I can get long and then hope for a gap fill. Or you can set your alarms at 318.75 and just say to yourself, I'll give up whatever little move that might be, and I will strictly play for the gap fill if I get that gap entry. So either one of those is fine. A fine way to approach that intraday if you're actively trading. IWM is interesting. We've had 3 days now where 190 has been tested to the downside in this little support zone. And you can see that although we are below the 200, 190 is held at the downtrend line. And that's what you want to see, as a technician, is that the downtrend line is holding. So for me, 190 is your big pivot. You can stay long above 190, but below it, you got to be a lot more cautionary. We've made a couple tries into this gap. So far have, not filled it. You've got the 200 here acting as resistance. If we go up to or down to the 60-minute chart, you can see exactly where that gap is. And we may open inside the gap depending on if the pre-market holds, being up, 0.5% or something. But if you get a clean entry here at 192.35, then you can play for this $2 and $2.30 move up to fill the gap. That would be a good risk reward type of a trade to play for a gap fill. Interesting day yesterday for Meta. Opened weak, gave an undercut here on the first bar of the day, then quickly reclaimed that level, and then went on a nice run. And you can see the long wick that went right up to touch the bottom of the gap right here at 165.50 and then fell away. So if you were, there's one guy in particular in the trading room that caught that trade, and that was an excellent trade on the recapture of a well-defined level from below. That's your entry, and then he got the big move all the way up to the gap. So that was a nice, let's see, 161 to 165.50. You know, if he got all that, I mean, like 450 type move, which was great, and it happened fast. Now it's subsequently pulled back, so now obviously there's a reset on Meta. You know, what is it going to do today? I would certainly have the gap alarmed. If you're, you know, plan on actively trading it, I'd have the gap alarmed for this $3 type move. And if you want to play on the downside, I would have this 163 type area alarmed for a potential move back down to, you know, 161. Just have to see how the day goes. Apple is just oscillating like within a $1 range. I think you let it oscillate there till price leads the way. I think if you get a move above 168, 168.25, you can take that long and look for 170 where the gap starts. It's not a big gap, you know, like $1.50 here. If all the stars align and you get long and it fills the gap, that would be a great trade. Or if 167 fails, then you got a $2 gap to the downside, and then potentially even a move down to 164 where you've got this large volume over price bar here acting as support. So Apple is just kind of waiting, oscillating, waiting for a direction. Tesla, big candle out of the gate, came up to fill the gap, then fell away. So we reset around this 890, 885 type area. I think that's your pivot for today. As long as it can stay above, it can make a move higher. If 885 fails, then I think it's going to most likely roll down to 860 at these prior lows. Microsoft acting a lot like Apple in the sense of really not doing anything after this big move, kind of consolidating. I think down here around 275 is your support area, maybe 275.50. And then you've got a clear line of resistance at 278. You see the large volume over price bar here, and that'll take a little work to break through. But then you've got a big gap above, and even, you know, above 280, your first target would be 282.50, and then you've got almost a $4 gap above to fill. So if this thing resolves bullishly, you've got some clear lines here to alarm if you're interested in the long side. And if it resolves bearishly, you've got a prior low here at 273.50, but then notice the profile falls away rather quickly, and I think you'd have a potentially sizable move to the downside if things, you know, fall apart at whatever point for Microsoft. Amazon, same thing, just oscillating. I think you've got a little pivot here at 134, and you've got the top of the gap holding at 132. I think those are your two decision points. If you get a break above 134, I think you can be long for this gap fill try. And if it loses 132, I think you have to be short for this potential $10 gap fill to the downside. One thing that's kind of interesting is that, as time has gone along, the uptrend line has come up to meet this support zone. Whereas back here, if you got a breakdown back here, you could potentially get a, support bounce in the middle of the gap and, bounce this thing back up. But now, two things have happened. One, you've got double support here. You've got the top of the gap and the trend line. But if that breaks, then you have much more of a clear path for a full gap fill, because the trend line will be in the rear view mirror and you wouldn't have to really worry about it as you would back here. If this would have broken back here, you could have potentially gotten a bounce. So I think 134 and 132 are your decision levels on Amazon. Google, more oscillation. 113.50 and 115, I think, are your decision levels. Of course, that's $1.50. If you wanted to take a long here against 113 with the idea that support is support until broken, you've had a lot of tests along this line of 113.50 that have held. And so you could say to yourself, I'll be long against 113.50. If there's, if I get stopped out, that's the price of the trade. But play for a move higher just from the simple fact that 113 has held all this time. So I would probably try it that way. If you're not interested in a long, you just alarm 113.50 and see if it doesn't break down. Netflix had an interesting day. Had that common move. We saw it in Meta, where this support zone held, broke out of 227.50, came up to touch the bottom of the gap, and then got turned away. I was short back here. I think, I'm not sure exactly where I got short again. I think it was with price at around 227. I took a shot at 225 puts, got stopped out of that pretty quick, and then I didn't participate in this. But now, if you're interested in Netflix, it's pretty simple. It's got to hold 227.50. If it comes into 227.50 and holds, then you can be long and try for this move back up into the low 230s and possibly get a gap fill. That was probably an ill-advised trade on my part. I mean, it was still in the support zone. I'm going to wait for a break of 222.50 on the downside before messing with Netflix again on the downside. Because once that breaks, you see the big ledge here. I think it would come down and find 212 pretty quickly. SMH, just kind of toggling in this support zone. I think a lot will depend today on how things react with NVIDIA, AMD, some of the bigger players after that, kind of bearish report. You've got a big gap up here between 231 and 235. That would certainly be a good one to participate in on the long side. And I think you've got a nice pivot here at 228.50. If price were to pop that, then you can get long, and then keep your fingers crossed for a gap fill higher. And then you've got to have, on the downside, you've got a big gap below to fill as well. Zipping through ARC. ARC had a good day yesterday, broke out, came up to resistance, and got stopped. So I think 1870 is your pivot today on ARC F. ARC G, pretty much the same thing. Based here, held support, got ramped. 38 is your pivot. You've got some overhead resistance at 39. If it falls back below 38, then probably 36 if there's some kind of a down move. ARC K, good day, 2.61%. I think you got somewhat of a wall here at 45.50. Right here in the middle, I don't think you really got much to do. I think your decision points are down towards 43.25 and 45.50. If you get breaks above or breaks below that, then you're looking at a bigger type move. ARC W found support here at 53, got a little bounce up to 55. You see the large volume over price bar here acting as resistance. I think if you got a break above 55, that would bode pretty well for the upside, and you could get a move up towards 56.50, and possibly, if this thing started going to town, back up towards to fill this gap. And you got to be on your toes if this thing loses 53, because then I think it will open up more downside to fill this gap here below. So take a look at your oil names. Take a look at your uranium names. We got long uranium yesterday. The charts have been shaping up. I was a little disappointed in Valero yesterday. It was feeling it out of the gate, and then they faded it the rest of the day. No damage to the charts, but oil was up yesterday, so I would have liked to seen Valero up. You can keep an eye on Oxy and Devon and some of those oil names, and if there's a big pullback in nat gas, I think keep some of those nat gas names on your short list. EQT and SWN, Southwestern Energy, are two nat gas centric names, and you can always play nat gas directly with UNG, that ETF. So keep some of the natural resource. Oh, another one is fertilizer. I missed the breakout. We're talking CF, Nutrien, NTR, and MOS, Mosaic. I missed the breakout, and I really, I thought about it and thought about it and thought about it. And as I was thinking about it, price was racing higher. I didn't have the stomach to step in. But fertilizer has been feeling it. There was a news flash that a fertilizer facility in Poland is closing because of nat gas prices. So of course, if you're closing supply, then price goes up. So if there's any kind of weakness there in fertilizer for a day or two, those might be good places to look for a long. And the nice thing about the materials and energy space doesn't have a lot to do with interest rates and stuff like that. So those might be good places to look for longs as they come out of their big pullback. So let's leave it there. Don't get too super excited today. Certainly take advantage of any intraday moves that you may see, either up or down. Keep in mind the big picture of CPI and JPOW tomorrow at 10 o'clock. And I think then a lot of the macro major data points will be in the rear view mirror. And then we can look ahead to the Fed in mid to late September on their next meeting. I'm sure they're going higher, whether it's 50 or 75. I don't think it's a huge deal. I think a lot will ride on how Jay Powell frames it tomorrow, whether he's, talking pause or pedal to the metal on rates. I think that'll have a lot to do with the next direction of the market. So let's wrap it up there. Hope you liked the video. If you're new to the channel, thanks for spending some time with me. If you appreciate technical analysis and having a little game plan before each and every trading day, hit the subscribe button, the alarm bell, jump over in the show notes. There's a link to the blog site where you can drop in your email address, and then you'll get all my commentary throughout the day, morning, noon, or night. If I see anything, I will certainly let you know, whether that's a trade idea or just a simple market observation. You'll have that right in your email box. So let's leave it there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.